Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, February 23rd, 2023. It's now the 22nd. We start off in the S&P 500 daily chart in DeMark looking back to end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 4 count, and to negate that for end of day on the 23rd there must be a close above 40.90.41 for the price flip to the sell setup count 1. Price couldn't heave itself over the relative retracement disqualified up line at 39.98.51. There was a 39.91.05 close. If it would have closed above the disqualified up one relative retracement, it would have become qualified. It gets another chance for end of day on the 23rd to close above the relative retracement disqualified up one and get that qualified. And price is still below the Ichimoku baseline, and the baseline is still underneath the conversion line. Conversion line is pointed down towards the baseline though. And S&P isn't going anywhere to the upside until it gets over at least the baseline and preferably the conversion line, to keep the conversion line from crossing under the baseline. If that happens, then we're pretty much guaranteed more downside. And the D wave down wave is on D wave down wave 2, and the D wave up wave is on D wave up wave B. And that won't print until price gets above this high on the 14th, at least for tomorrow. Next day after that, it moves over to this high, then this one, etc. And price has been under the channel 3 low for 2 days, so it can spend a few days under there, and then eventually the channel 3 low has to move down under it or price moves above it. And this is typical for the low channel 3 over here. This one had 2 days below it, almost 3. And to the downside support, that a little bit at the propulsion momentum down for 50%. Again, not normally support unless it's near other levels. And those other levels being the trend factor disqualified down 2. And then major support at the sell TDST lines. And I turned lines back on and zoomed in. Price would need to open under this ongoing demand line here, which for today is at 39.87.12. And this demand line was qualified and came about as close as you can get to getting it confirmed. There just was not an open below this close, but you can consider that qualified and confirmed. That's loosely applied to lines, meaning the qualified and confirmed rule. As long as it ticked lower and closed lower than the close before, that's pretty much confirmed. And if price does not open underneath that demand line there, 39.87.12, and then subsequently closes below it during the day for end of day tomorrow on the 23rd, it will be disqualified. The CBOE total put call ratio chart shows the KST for the put call ratio acting correctly these days. It's headed straight up, and S&P price is headed straight down, so that is correct. it wavered a little bit down here and had me concerned, but it got back on course and got with the program there. So it dipped right below this negative 150 line here and then headed up, and it went back above the solid blue line that marks some of these prior valleys here. So let's see if it can make it up to this line here, which is at about 120 positive right there. Then there's a green one here about 175, 180. And then ultimately this red one, which is around 300, 280, 290. So we haven't visited up there for a long time, and that would mean a very huge downdraft. So let's set our sights small here. We'll aim for this first blue one at 125 or so, and then the green one possibly at 170. And of course it has to make it above the zero line here. You can see the zero on the left. So this other blue horizontal line is zero. The S&P 500 support and resistance levels big board chart shows the gray areas at the monthly 12 simple moving average, 50 EMA, 200 EMA, daily channel 3 low, and R1. And to the downside is the weekly conversion line, relative retrace up 1, daily Bollinger Band lower band, the daily ongoing demand line, and the pivot point. And needless to say that the S&P daily AD line and NASDAQ 100 daily AD line are both under their 21 EMA signal lines. And Rock 1 simmered down after nailing the pain threshold yesterday. ATR2 is settled down to, pointed down 53.34, just about into the green zone. And the PPO extreme is still underneath zero at negative 0.27. And the New York traditional McClellan breath oscillator to get back to zero would require 3,839 advancers over decliners to get back to zero. So at least that's just about every single instrument within the NYSE, plus a little bit more. So technically will take a couple days or a few days to get back above zero. Have a great day.